Hi, I'm Lou from Dividend Dog. Welcome to the channel. Here we talk about stocks with an emphasis on dividends paying stocks. So if that's your sort of thing, please like and consider subscribing to the channel. So today we've all noticed that the grocery prices on pretty much everything have been going up. I think that's especially true of eggs. I noticed recently the price of eggs at the supermarket, we're looking at some real price increases here. So that made me look at, who makes eggs, who's producing the eggs in America. I vaguely know that there's some supply shortages. I know there was a virus going around killing off chickens. So that made me look at the largest egg producer in America called Cal-Maine Foods. They produce shell eggs. A little bit about the history of this company. Back in 1957, it was started by Fred Adams. 1963, the business expanded to build the world's largest egg farm in Edwards, Mississippi. In 1969, Adams Foods Incorporated merged with a couple of companies. Number one, it was Dairy Fresh Products Company of California, and also Maine Egg Farms of Lewiston, Maine. That created Cal-Maine Foods, supplying eggs from California to Maine. That's how they get the name Cal-Maine Foods. It went public in 1996, so becomes a public company. And since then, it continues to buy up other egg farms. In the year 2014, it sold over 1 billion dozen eggs in 1 year for the first time. So it's a big egg company. Let's look at the financials here of this company. So when we look at the financials, we get a sense here of where they're at money-wise. A couple of important things to note. The first one is that dividends are very erratic, and they're governed by what the company refers to as variable dividends policy. The 2022 annual report on 10K has this to say about dividends on page 20. It says, Cal-Maine has a variable dividend policy adopted by the board of directors. Pursuant to the policy, Cal-Maine pays a dividend to shareholders of its common stock and Class A common stock on a quarterly basis for each quarter for which the company reports net income attributed to Cal-Maine Foods, computed in accordance with GAAP in an amount equal to 1/3 of such quarterly income. Dividends are paid to shareholders of record as of the 60th day following the last day of such quarter, except for the fourth fiscal quarter. For the fourth quarter, the company will pay dividends to shareholders of record on the 65th day after the quarter's ends. Dividends are payable on the 15th day following the record date. Following a quarter for which the company does not report net income attributable to Cal-Maine Foods, the company will not pay a dividend. For a subsequent profitable quarter until the company is profitable on a cumulative basis computed from the date of the last quarter for which a dividend was paid. Under the company's credit facility, dividends are restricted to the amounts permitted under the company's current dividends policy and may not be paid if a default exists or will arise after giving effect to the dividends, or if the sum of cash and cash equivalents of the company and its subsidiaries plus availability under the credit facility equals less than $50 million. So that's a mouthful. So basically what we learned is this dividend, it's extremely dependent on earnings. So how are the earnings? Well, the earnings are extremely erratic. The value line gives a very low score, 5 out of 100 for earnings predictability. But I don't think you need to be really an analyst to see this, that the earnings are all over the place. Some years in 2022, 2018, 2016, 2015, they make lots of money. Other years like 2021, they make very little. Years like 2017, they actually lose money. So there's no real consistency to the earnings. And because the dividend policy is based on this, there's no consistency to the dividends. They probably need this dividend policy because earnings are so boom and bust in nature. If we look at the ratings, Value Line gives it a financial strength of B++. Morningstar gives it no moat, fair value of $64.92 a share. But no, that's by computer algorithm. That's not an analyst. That's just the computer. I don't see any recent S&P, Moody's, or Fitch ratings. There's basically no long-term debt to rate, so it makes sense. As far as the insiders and what they're doing and what they're holding, if we look at the insider trading, the last couple of years, I only see a couple of sales in the $200,000 range. Going back further, I see a small buy and I see a couple of big sales by the CEO, chairman of the board, and also a big owner selling. These were back in 2020, and they took place at a sale price of $39 per share. These big owners were selling. They were really selling at a price significantly less than where the price is now. So that's not a good sign. I don't like to see that. As far as the insider ownership, the largest owners, one here we see is called DLNL. It's a Delaware LLC. They refer to as Daughters LLC, of which the CEO and chairman, Mr. Baker, is a member because his wife, Danette Baker, is one of Mr. Adams's 4 daughters. So Mr. Baker is the sole managing member of Daughters LLC with the sole voting power. It's also a trust where Mr. Baker and another daughter are co-trustees. Mr. Baker himself is also an owner of stock, himself, his wife, separately. Jean Reed Adams is the widow of the founder, Fred Adams. So it's very much a family-owned and controlled company. The addition of the special Class A shares gives the family effective control as far as voting. So in a way, it's good. It fosters, this family control fosters long-term thinking. But unfortunately, as an investor, if you don't like what's going on, you're just sort of along for the ride. There's nothing as an investor you can do about it if you don't like what's going on. So you go along for the ride, good or bad, if you own the stock. Let's look at some of the pros here with this company. I'd say the biggest pro is just simply the retail cost of eggs going up. That's what brought me to look at this company to begin with and to look at egg producers in general. The second thing here is they talk about their specialty eggs. They do Eggland's Best. It's growing volume over the past few years, which is good. It carries more profit with it. They got into cage-free eggs. Is this enough to really what we can call this a brand name product company? I don't think it is. I think it's too small of a share of the company. It's not a big enough part of the business to really call it a good brand name consumer product company. The balance sheet looks good. It's close to having no long-term debt. So I would say that's a good thing. But it does have this company as a company has a lot of risks to it, which we'll go over here. Of course, we all know that the egg prices are going up. That's good if you happen to own an egg company. The prices are rising. Unfortunately, though, when you get into this kind of a thing where you in order to produce eggs, your machinery is all these chickens, and the feed costs are going up as well. The 2022 annual report states feed is a primary cost component in the production of shell eggs and represented 61.9% of our fiscal 2022 farm production costs. They also go on to say also that primary feed ingredients, corn and soybean meal, are commodities subject to volatile price changes. Yep, I think that's like an understatement, but they sure are volatile, and that's kind of a big thing. So basically, to produce these billions of eggs, you need tens of millions of chickens. And there's always a risk that Cal-Maine's chicken flock gets infected with a virus or a disease. And then what? Then basically Cal-Maine is kind of screwed. And if you're an investor in this, you're kind of screwed too, because a virus can just wipe out a big share of their chicken flock. They've talked about this in their 2022 annual report on the Form 10K. It says HPAI says we are closely monitoring the outbreak of highly pathogenic avian influenza. That's that HPAI. The latest of which was detected in commercial flocks in the U.S. in February of 2022. According to the U.S. Centers for Disease Control and Prevention, these detections do not present an immediate public health concern. There have been no positive tests for HPAI at any Cal-Maine Foods owned or contracted production facility as of July 19th, 2022. The USDA Division of Animal and Plant Health Inspection, or HPHIS, reported that approximately 30.7 million commercial layer hens have been depopulated due to HPAI. Pullets impacted comprise approximately 1 million, according to APHIS. The most recently reported outbreaks of HPAI affecting commercial layer hens and pullets occurred June 7th, 2022 and June 9th, 2022, respectively. We believe the HPAI outbreak will continue to impact the overall supply of eggs until the layer hen flock is fully replenished. While no farm is immune from HPAI, we believe we have implemented and continue to maintain robust biosecurity programs across our locations. We're also working closely with federal, state, and local government officials and focus industry groups to mitigate the risk of this and future outbreaks and effectively manage our response if needed. So they have a plan to prevent infections decimating their flock. But the thing is that's good, but I still see this as a pretty big risk. I'm sure their competitors, they probably had prevention plans and mitigation plans. And, I like the way they talk about, just the flock in the whole United States. It gets depopulated. So basically, I guess these millions of chickens all died because they got this strain of virus. So, it's good that they have this security plan to prevent this. I bet every farm out there probably does things to try to prevent it. Once the virus is there, it's very hard, I'm sure. You got all these chickens all literally cooped up, and no pun intended, and it could just spread through like wildfire through the population. So I think that's kind of a major risk. I would say another one, the trademarks and license agreements. They go on to talk about that they own the trademarks Farmhouse Eggs, Sun Up, Sunny Meadow, for grain. They said, we produce and market Eggland's Best and Land O'Lakes branded eggs under license agreements with EB, which I assume means Eggland's Best. We believe these trademarks and license agreements are important to our business. So that's good. They own some brands. Those specialty eggs, like Eggland's Best, Land O'Lakes, those though are under license. So it's another kind of risk that they don't completely own those trademarks that they're trading under. There is another risk of the concentration of their top customers here. They say that our largest customer, Walmart, which includes Sam Club, accounted for 29.5%, 29.8%, and 32.1% for the years 2022, 2021, and 2020, respectively. So Walmart, really big customer. They say the top three customers account for an aggregate of 45.9%, 48.6%, and 51.1% of net sales for years 2022, 2021, and 2020. So, all going in the right direction. That, Walmart and these top three buyers, over the last few years, they've been going down, but these are still huge numbers. And when you deal with companies like Walmart, Walmart then has a lot of leverage over Cal-Maine as far as pricing. They have buying power against Cal-Maine, so that's not great. When you look at that kind of leverage that the buyers have. I think that a big risk here is that you can never trust the dividends here. You can never, that really is related to, you never can trust that the company can make money. 2023, with all the supply disruptions, it might be a great year for them. They're enjoying the bonanza in prices because of the prices being high. That's because, I'm sure, of the inflation and competitors having their flocks basically killed off by this virus. But the earnings bump may be very temporary. We don't know how much longer this little bonus bump of a bonanza that they're enjoying is going to last. In their annual report, most recent annual report, they talk about how the egg industry, it's called the Egg Industry Magazine. Everybody has their trade group, and I guess that's one of their trade magazines, that the 10 largest producers owns approximately 53% of the industry table egg layer hens. So yeah, this company is obviously a big company, but I think that goes to show, even though this is a big company, it's not like they own the market by any means. If we're talking, the top 10 companies combined here have about 53% of the market. There's still a lot of players out there. So, which I was kind of surprised reading about. I had this image that Cal-Maine, and they are the largest in the United States, and I had this image that they sort of just dominated it. That's not true. There's just so many players out there. They talk about it in their annual report like it's a good thing, that there's it's fragmented, there's lots of people for them they could buy, and yeah, that's true, but again, risk is they really don't have the pricing power. I would worry that their customers, like a Walmart, that are famous for, really squeezing suppliers, could turn around and just, threaten them that, we'll go to the number 2 or number 4 or number 8, company, and we'll buy eggs from them. And so it's something else to think about as a risk. But after some initial interest here, the idea of investing in the egg industry, the industry doesn't really excite me that much. As I read through their annual reports and their presentations on the nuances of eggs, and sure, like I said, they're already the biggest company in the space, but the thing that turns me off, I think, is that it's the commodity nature of this industry. It's just a commodity-based kind of thing. To give them credit, Cal-Maine is trying to change this with their differentiated brands, with the Eggland's Best and others. But we can, things like cage-free. But we can clearly see that there's basically no consistency in the earnings or dividends. I guess at a price I might be interested, like if the share price got really low for some reason. But as I look at this, I feel like I might have just missed the boat on this one. You know, the stock, it's already up. Uh, it looks cheap on a current price to earnings, a PE basis, but investors are smart and they figure the cycle can turn at any time. It's they're not going to give investors are not going to give a lot of credit to Cal-Maine's recent earnings, even though the earnings are really high. I think personally I'll stay on the sidelines and I'll pass on this for right now. This, by the way, is not financial advice. It's just my honest opinion looking at this. But I would say that this is the truth on Cal-Maine Foods. Please leave your comments, thoughts, opinions. Tell me what you all think. If you think like me or if you think different, I'm curious to hear. Thank you very much. And if you like these kind of videos, please like and subscribe. Thank you.